Let's then also talk about Metropolis's numbers. Looking at the consolidated Q4 performance, the revenue, EBITDA have both fallen. The margins as well have seen a bit of a dip, and the PAT as well has seen a downtick of about 17%. So let's throw more light on the earnings and what really is the visibility going forward. Ameera Shah from Metropolis joins in on the show right now. Ameera, great to have you on ET Now. Welcome once again. Ameera, what would you blame this decline across the board pretty much, your top, bottom line, as well as the margins on?
Well, I mean, if you look at the entire diagnostic sector, COVID testing, COVID PCR testing was a big part of the revenues in FY 21, 22, and 20, and therefore 22, 23 has obviously seen a decline in revenues because COVID testing has come off, and that's been the primary reason. That's true for the whole industry. So I think we have to look at what's actually underlying and look at the non-COVID growth, and the non-COVID growth has been 18% for the whole year for Metropolis. And I think that's really the story for moving ahead into the next year as well.
I just wanted to understand that you spoke about the trajectory for next year, but do you think that this pressure is likely to continue? Do you have any sort of targets internally that you would like to reach when it comes to your revenue or your margins?
I don't know which pressure, because I mean, the pressure was only about the COVID testing falling off, which obviously was something the whole industry was going to have to deal with, because the same way the revenues went up very quickly because of COVID testing, they came down when COVID got over. So I think that is now behind us. While obviously there'll be some continual to be some dip in COVID next year, but that's not a significant part of the revenue anymore. So I think if you're referring to any pressure from an industry perspective, obviously, there was a lot of competition that came in the last 18 to 24 months. But Metropolis's positioning has always been about people coming to us when they really want quality results, when they're unwell, and they, especially even well people, they are coming for a brand that they know they can trust. And frankly, when new players come in who don't have that trust from consumers, it doesn't really impact our growth prospects. So we are very hopeful and positive about what we believe the next year and the couple of years after that can bring.
Fair enough. No, I was just referring to the fact that there has been a decline this time in your margins, etc. So whether or not that would continue. But you've also been making a lot of investments in tech, digital. How are you seeing the experience of lab testing now changing? Where is your focus as a company currently?
So, the investments in technology and digital started happening during COVID, where frankly, before COVID, healthcare was much more not really technologically driven, either with doctors or with patients. And one of the big consumer trends that have changed during COVID is that people want a digital ability to engage digitally. So we've been obviously the last couple of years making good investments into really making sure that we are able to engage with consumers in every channel possible. So today you can get on a WhatsApp with Metropolis and you can book a test, you can make a payment, you can find a flebo, you can get information, and it's all very easy with the click of a button. You could do the same thing on our site, on our app. So all of those have been introduced, and our digital revenues are actually growing as well. But in healthcare, the main consumer interaction or the patient interaction will always still be offline, because we have to collect blood from patients. So maximum a booking can happen online, but everything else will always be offline.
Absolutely. Ameera, tell me, what is the pricing environment right now? Because it seems that there is a whole lot of price competition and pressure within the industry.
The industry is very nuanced and segmented. And I think the mistake most people make is to see diagnostics as one industry, right? It's not. It's actually depends on which part of diagnostics you play in. So, for example, for a company like Metropolis, like I said, which has always been in the sector where people come to us for quality care. It's not like there were not cheaper companies available for the last 30 years. There always were. But people still chose to come to Metropolis because of the trust that they need the right diagnosis, and the right diagnosis will lead to the right treatment for them. And therefore, we have not seen pricing pressure on the consumer side, where we feel consumers are still very happy to pay the fair prices for Metropolis because they know they're getting a quality report. And how often do you do testing, right? You do testing once a year. So price is not the most important thing when you're thinking about when you're suffering with a 103-degree fever. You're actually thinking, where can I get the correct report to diagnose my mother's cancer? And therefore, how do I treat it the best way possible? So we don't see pricing playing a big role on the consumer side. I think the only place that there is some pricing pressure is on the B2B side, where the intermediate margins of distributors, of customers in terms of volume of discounts has gone up a bit, because new competitors that have come in are only coming in with price, because quality or expertise may not be their USP, and therefore they are trying to drive price competition in the B2B segment.
Okay, that's one aspect of it. The second one, of course, is expansion as well. And I want you to talk about, the expansions that you've lined up until FY25. And, as per our understanding, you planned 90 labs, 1,800 network centers by FY25. Would you not require further capex then for the same?
So out of the 90 labs, we've already completed 30 labs. And in FY23-24, we're going to do another 30. And the balance 30 in 24-25. In terms of centers, we had aspired for 1,800 in 4 years. We have already done 1,100, about 1,057 in 2 years. And we are hoping to add another 800 this year itself. So we'll finish our 1,800 target in 3 years instead of 4. There is some capex which is required for the lab expansion as well as for the collection center expansion. But frankly, that comes very easily through our internal accruals, because this expansion capex is not very large and significant, because we're not building a global reference lab like we have in Bombay or very large size labs. You're building satellite labs in new smaller markets where the capex is not very heavy, but gives us an entry point into markets that we are not already present in. This is not going to increase the capex load in any significant way.
Any inorganic expansion plans, anything that you're currently been looking at?
So, obviously on the inorganic side, we're going to continue to look at some bolt-on acquisitions. If there are things where, again, entry points into new locations and new markets, that is something that we'll continue to keep looking at and evaluating. And of course, if there's anything that interesting that comes up, but we're always looking for things which ethically match the way we do business. We're looking at people who've got high quality, good ethics, similar mindset. In the industry, which is busy and crowded, that's not always easy to find. So we'll always keep a watch out.
Appreciate your time, Ameera. Thanks much for joining in and giving us a deeper insight as to how things are shaping up at Metropolis.
Thank you.